Good day. This is the Eye of the Storm podcast with the weekly update for the NASDAQ 100 being recorded on Saturday, July the 6th, 2024. I'm going to start with the cash market. That's the NDX, and we're going to take a look at what really was going on last week. And it was quite impressive as we continued to just push higher, but it got narrower and narrower as we pushed up to Friday's highs, actually. Now, again, in my opinion, I continue to see this as far as the option flows. I know a lot of don't care about the options flows, but this is important to understand. With the limited move not being broad-based, but basically kind of sticking to anything AI. So artificial intelligence, that sector continues to push a lot of money into the market. We saw it come into Apple. We saw it come into Meta. We saw it come into Tesla, which is not necessarily AI. But these created, they're part of the Mag 7, and they created a very strong rally as we approached the expirations. Now that was from June 21st, June 28th, and now July the 5th. So we've had that first expiration pushed out into July. Now, again, what I've been noticing going forward is there's a strong buildup of calls on the monthly expiration cycles going all the way through September to December. So we're getting them almost on a quarterly basis, right? So we had June, pretty large. It was very, very large. Next up, September, building to be very large. Next up, after that, December, building to be very large. Now, in between, we tend to see not as big of a buildup as we see on those quarterlies, but still week to week, we're getting a lot of call activity. So long calls. I'm a dealer. What does a dealer have to do? I have to sell those calls, and I have to then buy the underlying. That's the hedge. And if there's at the same time buying calls and selling puts, then the dealer is buying the puts and selling the calls, which produces a double need to get long. You need long deltas to offset those short deltas, and then that puts you in a little bit different position in terms of gamma. So again, what happens is the market continues to move higher, then further hedging is necessary by the dealers. Thus, we get a continued upside move. And as we're now approaching that expiration and they're deciding where they're going to pin it, then we get sometimes a little bit even stronger move up. And as we start to break resistance in what I would consider no man's land, so in other words, we've never been up here. So every day and pretty much every hour, we're clocking new all-time highs here in the NASDAQ. And it just free flowed to the upside on Friday. They pushed above 20,400, 20,500, 20,600 in the futures market. Those are, in my view, very, very high levels. So again, I started to work through, we're seeing an extension within this minute fifth wave. So the minute fifth wave started right here. Started off of the April lows, the April this year, off of those lows, we've been in a minute fifth wave. We've now seen the minuet third wave, that extended. And then within this minuet fifth wave, so I'm just going to start to bring this down pretty quickly here. Let's bring it down to the daily chart. Actually, I'm going to do it again because you can see we really started to extend within the sub-minuet third wave within the minuet fifth wave. So I want to bring that down. So again, because of these expirations, we saw the strong push Thursday, Friday. Wednesday, Friday, because Thursday was a holiday. So again, bringing it, I wanted the 4-hour chart. Bringing it down to the 4-hour chart, we can start to see inside this. So again, everything here, 1, 2, 3. Then we got the 4, and actually the 4 became a running 4. Because I had marked it here earlier. And that would have left this as a 1-2 and then pushed this as a third. But then it ceases to function when I bring it down on the time scale to put 1-2 here. And then this just kind of gets totally out of hand in terms of subdivisions. But you can see now the power, I'm in the hourly chart, the power within this third wave. So that low was the 2nd of July at 19,741. Here we are at 20,000. Sorry, we didn't get above 20,000. We did. Hold on. I'm in the cash market. My apologies. I need to just follow my own direction here. Within the cash market, this low was 19,741. The high was 20,407. That, and basically 3 days, of which it was 2 because we had a holiday in the middle. So the 2nd, then we had the 3rd, and then the 4th was the holiday, and then the 5th. It was pretty crazy to see that type of movement. But we had an intense run in Tesla. We had an intense run Friday in Apple, also Tesla, also Metaverse going up almost $30. In fact, it was over at one point $30 and bid higher after the market closed. So that's what's kind of fueling this. But here we sit in very thin territory. You do get to a point where volatility has to increase, right? Premium has to increase. You're not going to just keep selling these calls. You know, as a dealer, you're like, they're going to want more premium. Fact is, people are paying it, you know, so it just perpetuates itself going up. But if I'm looking at it correctly and I've got it down, and I've brought this all the way down to a 15-minute chart to really just kind of look at this powering. There was the break, right? This goes into the 3rd, and now we're up, and here's the 4th, sideways, and now we're coming back into the 5th. So on the 5th, we went from 20,200 to 20,400. 1 day in the cash, 200 points. Amazing to me. It amazes me. We were up 205 on Friday. And it truly, really wasn't totally broad-based. We saw Broadcom down 25. Mind you, the index was up 205. So it wasn't broad-based enough, but we did see some the market. Now, I want to pull this back out, and let's just go to the daily. The daily's pretty oversold now. Again, lower high, but strongly higher high in the index. So what's it tell us about the relative strength? That it is not broad-based, that it's being very limited to a group of stocks within the NASDAQ, that we're seeing this strength, this overwhelming strength in the market. Now that to me is like, okay, eventually it's going to get all caught up and we're going to get a massive turn. And that massive turn is going to come in the form, in my opinion, it's continually going to be a minor 4th wave. So my longer term prospect for this market really has not changed. It's just that we're extending so high within minor 3. We're still in minor 3, and we're still in minute wave 5, and they're extending and extending. So let me go back out to the weekly so I can show it. If I pull this down, what do we have left? Well, as far as that 5th wave goes, we're kind of down to where the next one for minute wave 5 would be 1.618. 100% has been exceeded. So it's filled, the necessity of reaching levels that would be like at 100%. If the market were to continue, and we were looking at a minute basis, it's 1.618. and that's at 23,865. Now, am I expecting that? I would say no, but you know what? This thing has been so crazy. How do I know this? As we start to move into earnings, that they just don't keep this folly going without a correction. Now, that I'm not necessarily looking for, but can I say absolutely not? No, absolutely not. I can't say that. The market to me is in a parabolic type finishing move for minor wave 3. So after a minor 4th wave, we get to do this all over again. They get to really run the gauntlet all over again in a minor 5th wave. And that then just on the top side is just going to be completing the intermediate 3rd wave. And then we come back down in intermediate 4th wave, likely back to that same area. Again, I don't have minor 4 to base it on, but right now, minor 4 would be anticipating to come within the price territory of minute 4. And I've got that labeled out, and it's here in that orange box. So the market still, right now, even if it got up to 21,000, still has the potential to drop very quickly and back down to 17,000 basis the cash market. That's a pretty big move. Now, granted, the window starts at 18,540 down to 17, but even at 18,005, that's going to be a large drop. It's just going to be a minor 4. My estimation, it's just going to be a minor 4. We get to run it up again in a minor 5th. That's going to complete intermediate wave 3. And then we have an intermediate 4th wave bringing us back down to that same area. And then we have an intermediate 5th wave. And that is the one that could take us much, much higher. This would no longer be valid. I would then have to work out different levels because this is for minor wave 3. So let's just kind of open this up a little bit so I can I can start to take a look at what we got going on. All right, so I'm going to bring this all the way down so that I can go over the internals here and what okay, so it's up so high that I got to come all the way down here. All right, so if this, now we're inside this minuet 5th wave, so that's sub-minuet 1, 2, and 3, if indeed 3 is complete here. So basically what I'm saying is that any follow through to the upside to begin on Monday would just, I think, extend this 3rd a little bit more. And maybe we will get up above 20,400, a little bit higher. But I'm still looking that the market, look at, this is the 1 hour chart. We're peaking. We're peaking. Now, on the 1 hour chart, yes. Basically, let me just put that in. We're only equaling the highs from the minuet 3rd. So that was below 20,000. Now we're well above 20,000. And again, relative strength peaking below the existing high, or equaling that existing high pretty much. So again, selective. So anything more, I think, could just kind of get a spike, and then we should start that sub-minuet 4th wave. Now, counting from this low for wave 2 to that existing high that we have, I project down to 20,250, 20,150, 20,075. Now, that would be a pretty steep drop for it to rally all the way back up. Impossible? Not at all. Again, as I said, next week, our focus shifts and the market begins to focus on what's coming out, what numbers are coming out next week. So we really, the big thing is that we have Chairman Powell is testifying into the Senate on Tuesday, to the House on Wednesday. We have basically wholesale inventories on Wednesday. I don't think that's going to have as much pull as Powell testifying before the House of Representatives. I think could have a lot more, because for whatever the reason. Now, on Thursday, we have consumer initial jobless claims, consumer price index. So it's CPI. So it'll be CPI day, plus at 2 p.m. Eastern, we have the monthly U.S. federal budget. Friday, producer prices. That could kick a fourth wave really in. Now, we could start it here, or that we might have to make an arrangement where we come down, we go back up, all before Wednesday and Thursday, or Thursday and Friday, whatever the day, the CPI and PPI. So Wednesday and Thursday, or whatever those days are, that would be, we can get a little 4 and then another 5. And then we get the bigger numbers, the CPI and the PPI, and that really could start and drive the market crazy. And again, depending on what Powell, I don't suspect that Powell's going to be really going toe to toe with any attacks, but we'll see. I think he's going to try to appease the Congress and the Senate, just to kind of, okay, well, yeah, we're this is all good, everything's glory, blah 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 blah, whatever the situation might be. But we'll see what kind of happens. To me, the numbers that could really help to put a top in, I think we get those before we get a little bit of a fourth wave down. And again, it could come down to 20,290, and that would be where the 13 is sitting. The 20 is just below 20,212. That would be a good place for a little 4, and then we rally back up. If they start to break below these moving averages, it will drive the market lower. It will pull in some selling. Because right now you can see the strength in the market on the hourly is pretty strong. We even got the 200 rising now, the 50 rising now. But as this starts to break, again, I still look at a little 4. I need a fifth wave. If I get the fifth wave and I can put that minuet fifth wave and that minor third and the minute fifth wave and the minor third up there, then I think we can get started on a much stronger minor wave 4 correction, and we start to break these. And then that'll turn things more negative. And as they break, we could get a very fast move back down to these lows into this area, and then follow through. Remember, we'd be looking for a minor degree A, B, C. And again, just so that we're aware, that's the window. That's the window that I'm looking for as the market corrects in a minor fourth wave. Again, longer term, minor 4 will yield to minor wave 5 back up. Minor wave 5, when it tops out, and I will have those numbers once 4 is in place. Right now, it's just guesstimates. So I'd have that number more solidly in place once wave 4, minor 4 is complete. Minor 5 underway, we'll put those numbers up. That then completes intermediate wave 3. Then we get an intermediate fourth wave, likely come back in the territory of the minor 4, and then rally again. We still have quite a few rallies, and that's why and I think what that goes along with is our quarterly expirations. Our quarterly expirations are heavily call buying. September, December, lesser in between, but those are the major quarterly expirations. And we got major call buying going on. And it just continues to build, and I'm sure it will continue to build as we move forward in time. All right, over in the futures market, crazy as well. Now, again, I'll just go out here. Nothing changed. It's all still the same. Intermediate 1, 2, minor 1, 2, minuet. Minute 1, 2. That should be down here. And then we have 3 and 4. That remains the window for the minor fourth wave. I'm still anticipating, but we start to truly extend. Now, coming off that weekly chart, let's just go straight down to the 4-hour chart. We had 1, 2, and that third wave, that minuet third wave that I pushed up to here. And I put the 4 down to here, but then see, this did not pan out. So it turns into a running fourth wave, right? So minuet 3, minuet 4. So it didn't go out and take that low out, but still, I'm putting my 4 here. which puts a little bit more upside into play for the completion point for the minuet wave 5. So let's come down to the hourly chart, excuse me, and take a look inside. So minuet wave 4 completing at 19,811. And then we start. And we get 1, 2. Then we get this incredible third wave again. Now to show you, July the 2nd, the low was 19,910. July the 5th, the high was 17,638. Let me get it right on the button. That is a very large rally that was not broad-based. It was pretty incredible to watch. And it was also pretty incredible to trade. Gotta tell you, it was also really good to trade. Now, depending on how you trade and what you trade, again, I'm going to emphasize, I was a market maker on several floors, both here in the US and in Europe, but I stopped trading. I still do trade options, but not as a dealer, let's say, or as a market maker. But I switched to being a day trader. I'm not necessarily dissatisfied with being a day trader. I'm not dissatisfied with not carrying any overnight positions. I'm not necessarily dissatisfied without taking directional positions. So that does not necessarily influence, but I stick to a more technical picture. And while I may be looking for a correction, we continue to get extensions. So what I've attempted to put now in is just a little bit of a look at like a weekly technical side. Those indicators do begin to suggest that we're getting a little bit overbought. And as we can see in our hourly chart, the RSI, again, very overbought, still only equaling previous highs, not moving to a new high, even though we substantially cruised past the high points of where the market was here. So you can see when it made this high here, it was a lower high than here. When it made this high here, it was a way lower high than here. Or equal, but a lower high than these. So limited participation, we turned, we rolled pretty quickly from 20,638 to close at 20,591. Not tremendous, but enough to really roll the relative strength. MACD oversold, overbought. We have stochastics overbought. We have a lot of in the ultimate oscillator overbought. So they begin to shift from being to being strong buys. I don't know how deep we're going to have to come down, but I think we might start to see more sell indicators, maybe even moving into strong sell if we continue to drop, even in the small subminuet fourth wave. Now, I don't think on our dailies and on up that they're shifting yet. They're not. So as the technical indicators continue to build towards really we're oversold, that's going to shift it. But I'm still looking for just a smaller fourth wave down, another one back up, getting itself back above 20,638. So now let's take a look at what our numbers give us as possibilities of how high we can go. First up, we have the minuet fifth wave. 1.382, I'm throwing it out there because it does get used. It doesn't necessarily fit to what essentially we'd be looking for, but here we have them. I've had to add and break down to what I was using, which was like 100%, 1.618, 2.618. Well, there's others in between that are being used by the market. One of them is 1.382. That comes in at 20,698, so almost 20,700. Could that be possible? Absolutely, it can be possible. I'm looking for a small 4, and then we come up. So unless this count can be a little bit different on the internal, because yeah, is there a possibility that wave 5 is here? Yeah, there is. But I'm going to leave it open because it's just the strength I don't think I'm going to walk away from unless we start to see this thing really get hit and it drops below these levels. That's going to increase the chances that this is 1, 2, maybe that's 3, that's 4, and we got a 5 or 3, 4 here. Like their reaction to those employment numbers on Friday was bizarre. How they flipped it, they ran it, triggered on the downside, and then it just absolutely flew higher and didn't stop. Once it got going, it didn't stop. So whether that was 3, 4, and this is the 5, and we're done. And again, I can put in minute 5, minuet 5, minute 5, and minor 3. I'm not doing it because it has proven to not necessarily be incorrect, but just being far ahead of what the market's still going to do. Now, with this increase in call buying, it may just extend it out one more, possibly a week or several days until we start to hear from Powell, and so we start to see CPI, PPI. They could continue to just plow into the market. Again, we need to see how firms, traders, everybody came out of expiration, and do they really want those positions, or what do they need to do to make any adjustments moving forward with what and how they came out of expiration. So we've got that probably dealing with starting tomorrow, and then also into Monday's opening. So we could be all done with this come Monday morning and then start to move ourselves lower. All of that can happen. But once I can put a wave 4 here, then I'll run again for the sub minuet wave 5. But right now I got 20,698, 20,850. That's the 1.618. So that's a pretty strong candidate. What's that suggest? We got another 250 points. But then again, when we have to balance this again, what did the NASDAQ do on Friday? Cash market was up over 200. Futures market was pretty strong. It was up 200 at one point. So could it if it puts in another 200, here we are, sitting just underneath all that. So these things remain a possibility. It is, in my opinion, it does feel like we're up in the stratosphere, and eventually, lack of oxygen is going to start to drop things because we're all going to start to pass out. So in other words, it's like, I think that we're becoming to such an extreme overbought level that the weight of all of this begins to pull the market lower. And so if we start to see a switch where we're getting call selling and put buying, it could start to roll this thing into that larger correction that we're looking for. All right, so moving averages here in the futures market, I'm going to start on the 4-hour chart. We can see they're all still, look at that, rising, 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 rising. So until what will give us some clues that the larger minor fourth wave is in progress or underway is that we start to break the 20, which right now is at 20,358. So, and actually this little fourth wave that I'm looking for right now, it could come all the way down there, get 382 and turn and run. If it starts to break 358, it may turn things and we may readjust, and it could contribute to the fact that that high is going to mark a sub minuet wave 5, minuet 5, minute 5, etc., all the way up. It could. I'm not saying that it will. Right now, I'm leaving open the possibility we come down and go back up again, and then start to come down. But what will tick us off, whether it happens on Monday, or even during goldbacks, or if it happens after we've come down and rise back up, then we're still, the key is going to be when the market does start to come down and it breaks below the 20. That's going to be a key, start to suggest a little bit stronger. Our highs are in for right now. We're coming down in that larger fourth wave. And then again, we have this window. So again, in the daily, it's all green lights right now. Not as heavy duty as the hourly, even the 4 hour, but they're all, look at the space in there. Whew. We're all still heading higher and still heading in that direction. So again, on the daily, the 20 is sitting at 19,913 right now in the futures market. So that, if it gets broken, would start to really suggest that the highs are in for now and we're in that minor 4. This would give confirmation, and then we know we're heading lower into that window of opportunity, so to speak. And that would be here. On the weekly, that 20 is at 18,700. So, but by then, if that were to break, we're in the window. Then I'm looking for the market to kind of get down to a level and bottom and then finish that fourth wave and start back up again. So the signals are going to come via the hourly 20, which is at 20,511. So if that starts to break, yeah, it could be in this smaller 4, but you know, it should start to produce a little bit more solid strength. And then here we have it at 20,358. And then that daily, which we have at 19,913. That would be the one to watch. If on the daily we get down there, then pretty much the highs are in and we're kind of heading lower. All right, that's going to be it. The next Elliott Wave daily update will be on Monday, July the 8th.